It's his first interview as CEO of Goldcorp. David Garofalo joins us here today at the BMO Metals and Mining Conference. David, good to have you on the show.
Good morning.
So you're coming in at Goldcorp, first day as CEO here, coming in with a major loss, $4.2 billion. What are your plans here?
Well, right now we have actually a very solid foundation from which to build. We have a 3 million ounce business, low cost, low political risk. We have a bulletproof balance sheet from which we can finance growth opportunities internally. We don't need to go and raise capital, and we have a very robust pipeline of internal projects that will optimize the existing business.
So I want to give you a chance to clarify, because I know you recently spoke saying how perhaps you were looking at expanding into Africa, but you said not quite so.
No, I mean, the best opportunities we have available are the internal ones, the brownfield opportunities, the expand existing operations that actually extend mine lives. And when we look further afield, clearly as a senior company, we need to look outside the Americas, but we would never dilute our low political risk profile. That's one of the endearing qualities, one of the catalysts that investors look for in Goldcorp stock.
How about expanding into base metals? Is that a goal?
No, not at all. I mean, our focus is on gold, on precious metals. Of course, if we found another Peñasquito type of deposit, which is polymetallic, but it has a majority precious metals, we'd be thrilled with that because that's a very low cost structure type of business.
A lot of people concerned about the lack of exploration in the mining field. Is that something that you're aggressively eyeing in 2016?
We have a $135 million exploration program that's focused around existing deposits, around existing complexes where we have the potential to positively impact mine plans in the short to medium term. So our focus will be very much on brownfield exploration. So it's a very substantial budget. And also we want to cultivate the next generation of projects, and we'll do that by funding juniors, putting some toehold investments into juniors.
So it's your first official day on the job here. What are some of the first key issues you want to tackle here?
Well, I think it's about reorienting the business for the next phase that we're in. We've just exited a massive construction program, construction of two large mines, Cerro Negro in Argentina, Eleonora in northwestern Quebec. And now we're in a period where we're harvesting our business and trying to optimize the returns, actually generating a return from that massive capital investment and compounding that return by looking at brownfield expansion opportunities within the existing pipeline.
And you have the low Canadian dollar working to your advantage there.
And low Argentinian peso, low Mexican peso as well. So emerging market currencies are certainly trending in our favor. That's helped bring our cost structure down, in addition to the efficiencies that come from achieving a steady state at our existing business.
All right, I'm excited to get your thoughts on the current gold price environment. We're up about 18% here from the start of the year. How do you see gold prices set up?
What's really surprised me is back in December when I was hired, the Fed was just talking about their first tightening. Right. And so the expectation is we would actually have some significant headwinds going into 2016 with the prospect of 4 or 5 tightenings over the course of the next year from the Fed. Well, the Fed, and I've never seen this in my entire career, has done a complete 180 in 2 months. And now they're very dovish, where they were hawkish 2 months ago. It's completely changed the dynamic for gold. And gold historically has had a very significant negative correlation to interest rates, both on a real and nominal basis. And now we're facing the prospect of not only low or negative real interest rates, but nominal negative interest rates as well. We haven't seen that before. Nobody can remember that. That's going to drive the gold price. Plus, we're achieving peak supplies in industry. The top 10 gold producers are projecting that their production is going to go down 8% over the next 3 years. And so the demand-supply fundamentals are extremely supportive of the price right now.
What about the global economy? Do you think we'll see a recession this year?
Well, I think we're going to see slow growth, particularly in the industrialized world. I think we're going to see at best 1% to 2% growth across the Western world. And that means that we're going to have to maintain a stimulative stance from the central banks.
All right. Finally, what's the sentiment like here at the conference compared to 1 year ago? Is there more optimism?
I'd say even compared to 2 months ago, there's a lot more buoyancy given how the price action we've seen in gold in the last little while. But I'd say there's also a bit of caution. I'd say capital has started to filter back into the senior players. The juniors are still capital starved right now. So there isn't that commitment to the space right now, but I think that's to come if we are able to maintain the upward trajectory in gold price in the medium term.
David, thanks for coming on the show. Best of luck.
All right,
and congratulations.
Thanks very much, Danielle.